Welcome to the channel. I am James, and today we are looking at Twitter Inc. ticker symbol TWRT. We are going to be going through the most recent news that came out around Twitter and then look at the financial statements of the company to see if this stock is a buy or sell in 2022. We're going to be putting these values into my discounted free cash flow model and the Buffett-Graham intrinsic value to give the fair value of the company should you buy this in 2022. So firstly, what's happened with Twitter on the day? You can see it's up 2.5%, and this is with the latest news here that Elon Musk will not be joining the Twitter board, the CEO said today. So the market has reacted pretty positively. That 2.27 up today to $47 a share. Now, you can see the stock has had a pretty bad 6 months. We've looked at the last month, it's up 43%. And obviously this with the news of Elon Musk buying a 9.2% stake in Twitter, making him the largest shareholder. So that has already been a good purchase for him, but should we be purchasing it? That is the question. Overall, yes, it has gone up 43% in the last month. But if we look over the year, it's down 33% from about highs of, what was that, just under $70 a share, just over, sorry, and is now at 47. So guys, first, can you please give it a like on the video and subscribe if you're not already, because I'll be bringing out more videos. I've been sick with COVID and I'm back with a vengeance. So let's have a look at the fundamentals of the company. We have the 12-month statement here on the right, and then the 3 months ended on the left. We're going to be looking at the revenue first. Is revenue increasing? Yes, 3.7 billion to 5 billion. So that is up on the year massively. And if we look at the quarter as well, 3 months ended December 2020, 1.289 billion, and that has gone up to 1.56. So that is up. And if we go again, looking at Yahoo Finance here, you can see that revenue has steadily been climbing from 3 billion to 5 billion compared to 2018 to now. So that is in the right direction. Now I want to see if the profit is increasing, and unfortunately Twitter is not profitable, but trending in the right direction. On the end year 2020, 1.1 billion in the negative, and this has gone to minus 221 million in 2021. So profit is still, well, they're still making a loss, but it is decreasing, which is excellent news. If you look at the quarter as well, actually a bit negative as well, 222 million down to 181. So that is unfortunately negative, decreasing, but overall the picture is looking good. And if we compare to what Twitter has been doing, it was a profitable company back in 2018 and 2019. That massively switched in the pandemic year, but is improving. So we're probably expecting profits again in 2022. Next, what we're going to be doing is looking at the shares outstanding. Are these increasing or decreasing? You can see they're actually issuing more shares, which is negative. This means that they are diluting the shareholders. But if they can use the capital that's being raised and invest this in the business successfully, then obviously shareholders won't care as much. So you can see it's gone from 787 million to almost 800 million in shares. Next, what we're going to be doing is looking at the free cash flow. How do we get free cash flow? Well, it's cash from operating activities minus CapEx, which is properties of purchase and equipment. You can see that the net cash flow from activities has decreased 992 million down to 632, and CapEx has increased from 873 to 1 billion. I'm not going to be doing the maths here because Yahoo Finance does it for me. So let's just quickly go to the cash flow statement. And yes, as you can see here, it's going to be round about minus 387 million. It was positive in the years prior and now negative. So that is another bad mark to Twitter, which will be reflected in the free cash flow statement that we're looking at now. So what I do is I calculate the future free cash flow. This is based on an average of the previous years. And what does that give us? A valuation of Twitter for $21 a share, which means it's at a 54% discount. But if we're thinking 2021 is a bit of a blip, let's increase the numbers here and not use that as one of the averages. So let's just say that we want the free cash flow rate to increase at about that. That puts us at 600 million to $1 billion in 2025. That would still say the stock is massively overvalued at its current rate. Buffett-Graham intrinsic value, this takes earnings per share, expected growth rate into account. Earnings per share is negative. Expected growth rate of Twitter is 80% over the next 5 years, but this will be a negative number because the earnings per share is negative, so fair value does not work. If we wanted to do this, we would have to put in some different numbers to see what Twitter would have to be fairly valued. And as you can see here, we need an earnings per share of about 28 cents a share, which is previously what it was at. So currently, earnings per share is not liking the stock. Discounted free cash flow is also not liking the stock. So both of the models are saying this is not a buy. Right, guys, hope you enjoyed the video. Please give a like if you enjoyed it. Subscribe if you're not already, and I'll catch you guys next time.